Our next presentation will be on corporate governance, legal framework, and practices for efficient and transparent capital markets. Our presenter is Rose Lumumba, who is a specialist in the development of capital markets and corporate governance frameworks. She is a trainer of trainers in corporate governance, and she is an excellent trainer, as I attest to that because I was her trainer in one of the trainings organized by IFC. Please give it up to Ms. Rose.
Thank you very much, Your Highness. You know, it's always a privilege and a pleasure for a teacher to meet a student. So I think I did well. For he is doing great things for this nation and other places. It's my pleasure to be here this afternoon and to share from my own experience and the experience of an institution I worked for on the importance of having good legal frameworks for capital markets. Please allow me to start by telling you a story so that the story can help the injera in the stomach and you don't keep nodding. And so in the mid-1990s, a young girl graduated from law school in a certain country. And this girl was very excited to join the labor market and to earn a living and make a contribution to the development of her country. And so therefore, when there was an advert in the newspapers, then we used to advertise jobs in the newspapers for a legal officer of a capital markets regulator, she was very excited to join. And the immediate the girl joined, one of the biggest tasks that she was given was to come up with a legal framework for a capital markets. The capital markets then had an act of parliament passed and approved, but it didn't have anything else to support the frameworks that we will be talking about today. That girl has now matured to a full-fledged woman, and she's standing here before you to share the experience of her life and the journey she had in creating legal frameworks for the capital markets in Kenya. When my friend, long-term friend Yodit called me last week, very late in the week, to ask me to come and speak, I actually couldn't say no because it triggered something in my mind, reminded me of my very young self when I quickly, after being employed, my employer then, the Capital Markets Authority, sent me on a trip to 5 countries in Southeast Asia, which were then called the Tigers. I'm sure many of you are too young to know that there were countries called the Tigers. But I went to those countries to learn how they regulated and developed their capital markets, and my task was to then come to Kenya and replicate what I had learned. And so coming back, I came with 2 suitcases. One suitcase was full of regulations, legal frameworks, acts of parliament, and one suitcase, of course, contained my clothes. Then I was quickly shut in a boardroom together with my boss, then Catherine Kohler, and asked to come up with the legal and legislative framework for our capital markets. I'm proud to say that we successfully did that, and we have been trading on that legal framework from then until now. Granted, it has been amended several times to accommodate the developments not only in the market in Kenya, but as well as worldwide, globally. And so therefore, you can imagine my excitement today if I run over my words and skip them. Please bear with me. I'm just excited to share my journey with you. Let me begin by referring to a report that was done in 2019 And that report was done by the World Bank Group, IFC. And it said, or it found out that capital markets in 2019, the capitalization was about 178 billion US dollars. Great amount of money. Now, the unfortunate part of that report was that the emerging markets, where all our markets in this continent fall, only contributed to 11%. But the beautiful thing is that we have a lot of room for growth. And so I'm very excited that capital markets is being established here in Ethiopia. I've been working in this nation on behalf of my current employer. I've been working here running a corporate governance program. That's why I met many of you. I can see several of you that I have met, including Johannes. And it has been an exciting journey to grow our corporate governance practices. Let me just remind you very quickly the main participants in any capital markets. Obviously, they are the investors. Investors are the people who have got the money and who would like to invest in capital markets and who want a return for the money that they invest. And they may include pension funds, insurance funds, individuals like you and me, charitable foundation. Anybody who has money and they qualify to invest in capital markets can actually invest. And those are called investors. And there needs to be a legal framework, and I'm sure Solomon and his team are creating a legal framework to protect the rights, the obligations of those people that we call investors in the capital markets. The next set of people are the issuers. And actually, perhaps I should have started with the issuers. The issuers are the people that are bringing the capital markets instruments that will be traded in the securities exchange. And for issuers, there has to be a legal framework, number one, that sets the standard of the product, that protects that product, that clearly spells out the rights and obligations of an issuer, and the duties to the investors. Then there is the investment managers or the intermediaries that we have in any capital markets. This would include stockbrokers, investment banks, anybody who is acting in between the investor and the issuer is an investment manager. So asset managers, wealth managers, hedge funds, private equity funds, whoever it is, and this also, they need a legal framework because they stand at a very important point in the whole infrastructure of investment. Why do I say so? These are the people that individuals take their money to and say, Mr. Investment Manager, this is my money. Please buy for me shares of company XYZ. And you know the risk in between there. Perhaps the asset manager will not invest. They will buy the wrong share. They will buy at the wrong time. Or they will do there are several things that could go wrong in the relationship between an asset manager or a market intermediary and an investor. Then, of course, importantly, there is the infrastructure, the trading platform. Infrastructure, extremely important. When I began my work at the Capital Markets Authority, everything was done via hard paper. To transfer one share, we needed a pile of papers, believe you me or not, that was this high. There were papers that the investor filled. There were papers that the issuer filled. There were papers that the intermediary filled, and it was a lot of paperwork. Somewhere in the 90s, toward the senior years of the 90s, we transitioned from paper trading to online trading. Luckily, and Solomon and Tim are here, I am hoping that we will not start at paper. Obviously, we will not. Why? Because other people have traveled that road, they have learned their lessons. Now we no longer trade via physical activity, papers. Then, of course, there are the investment banks, advisory boutiques, stockbrokers, etc. And all these people need legal frameworks and regulatory frameworks to regulate their activities, to regulate their reporting, so that everybody's rights and obligations are protected well. And so, I thought it's important just for me to put this in a map and to reflect it to you, and maybe just to show you that at the end of both the pendulum are the investors and the issuers, and in between here is really the capital markets. What is done? The capital markets. You can see at the very top, there is the regulation and supervision and enforcement, which, if it is not done well, your capital markets will not thrive. It will not grow. There will be too much risk. People will run away. They will not invest in it. And so it's important that we have a good legal framework, and I'm here to talk about the law that governs the entire relationship between all these people who are here. Now, let's talk about the legal framework for issuers. Issuers are mainly companies, and in Ethiopia it won't be different. World over, majority of the issuers are companies. So what legal framework do you need for companies? Number one, we need a Companies Act that settles and sets our companies well, establishes the shareholding, the rights, the obligations, the structure of management, so that a company is governed well and it is led well for sustainability. Because if anything goes wrong at the company level, the shareholders will lose. They will lose their money. It will fizzle out. And so the legal framework for issuers include company law, and then when we come to the capital markets, we also need a framework on exactly how an issuer is going to raise money from the market. For example, of course, obviously, they will be issuing things like information memorandum that will be talking about themselves as a company, talking about their investment opportunity, and making an offer to the public in Ethiopia for them to invest in their share. So legal framework, the beginning of a legal framework is to ensure that our companies are well established. And that's where corporate governance comes in. The second one, of course, is the investors. Investors must be properly guided. They must be told, how do you invest in the capital markets? And that has to be enshrined in the law. When is an order good? What are the parameters of an order to buy? Because some of the things about an order is that the order must be extremely specific. You must say, I want to buy 100 shares in Ethiopian Airlines shares. Specific. If an order goes to a market intermediary or a stockbroker says, buy for me shares, that is a bad order. And we had many instances, and I'm glad Solomon talked about educating the Ethiopian populace so that everybody knows how to buy shares. So an order must be very specific. It must be timeous. It cannot last forever. It has to be very timed. Say, buy for me between next week or tomorrow, Monday next week the 19th, or tomorrow the 17th, shares in Ethiopian Airlines. And then the other thing that must be stated is the price. A legal framework to ensure that the price, the share, the name, the number, the time are all stated. If that is not stated, then it will not be a good share. So investors need their own legal framework, and I'm sure the legal team at the capital markets must have come up with that. And then, of course, the law on products. We established a law on products. There are several instruments that can be traded in a securities market, beginning with the share. You need to say, is it an ordinary share? What other share can be traded in the securities market, and how can it be traded? How can it be passed over from one person to the other? What about the settlement? I'm sure you've heard about settlement today and since yesterday. How does that get settled? How does it move from X to Y and from Y to X? At exactly what time do I get my money when I sell my shares? When do I need to pay when I've given an order to buy my shares? And so there's a legal framework, or there are legal frameworks that are needed. And all these are for proper governance of the trading system of the securities exchange. Then, of course, there's the market infrastructure that also needs to be penned down in law. And you ask yourself, what kind of infrastructure do we need? When is settlement for us? When do I buy, and when do I pay, and when do I settle? When does a share move from one place, one person to the other? And that will need to be put down. And then, of course, there is the issue of transparency and disclosure, that all companies that will raise money in the Republic will have to deal with. And by transparency and disclosure, I mean that one of the greatest drivers of investment in capital markets is information. So there has to be a law on information. When do companies report? How do they report? To who do they report? Is very, very important. And information under corporate governance, it must be timely, and it must go out to all the people at the same time. There's no point of me, or if this side of the conference were my friends, and I performed so well as a company. Please allow me to use Ethiopian Airlines. I performed very well, and then I gave information to this side of the conference, and I told them, I will be releasing my results next week on Tuesday. And we have done very well, because our establishment at the Skylight has done very well. What would this side do? What would they do? The way it's expected, they will quickly run to the capital markets and do what? And buy the Ethiopian share. And then 1 week after I released my results to this side of the table, of the conference, and obviously it's now too late for them to take advantage of that information. And so information must be released. There must be a law that requires that information is released at once to everyone publicly of a particular quality, and we need legal frameworks under corporate governance to talk about that transparency. On the converse, if I have done very poorly as company X, and I tell my friends this side that, I will be releasing my results next week on Tuesday, and boy, this year has been bad. It has been very, very bad. And so we've performed so poorly, we will not give a dividend, we will not give anything, and I advise you to actually sell your shares. What would they do? They would run, sell their shares, and most probably sell to this side of the divide that don't know that the company will have performed very poorly, and so therefore there will be chaos in the market, real chaos. So disclosure and transparency is a very important thing, and we must legislate. We must put it in the law, and importantly, we must ensure that we enforce it with everything we got. If we don't enforce it, there will be what we call insider trading. Insider trading. One of the cases I prosecuted in my role as a regulator before was exactly what I have described to you. And so there was a company that was seeking a big loan from the bank. And the MD of that company quickly went to negotiate for the loan from the bank because of a big development they were going to undertake. And so when they were in the boardroom of the bank, and the bank had just approved the loan, they quickly send a message to their broker: buy the shares of this company at whatever cost. So the stockbroker quickly bought those shares. 2 years later, the company didn't do well despite the loan that they were given. And so 2 years later, they went for a further facility from that very bank, and the bank declined. And the MD still wrote another message to the stockbroker, sell at whatever cost, all my shares. And so when the case came to me, it was very clear what they had been doing. It's called insider trading. So insider trading was taking advantage of information that all the other people did not have, just because you are in that very special position of either the MD or the CFO or an employee of the organization. So we must legislate against such kind of things, and if we don't legislate, the risks in our markets will be very high. The last one is, of course, the environment. One of the things I love about these capital markets in Ethiopia is the commitment of the government. And what I have seen, because I work across the continent in very many capital market spheres, is that the government must give its 100% support, whether in privatization or in quickly passing policies and laws to support capital markets, and also, of course, supporting the growth very, very, very strongly. So political will, credit culture, encouraging people to save, because the money that should be invested in the capital markets is not money that you are intending to buy injera tonight. Because capital market investment needs a lot of patience. You can buy a share today or invest in the capital markets, and it doesn't grow. It doesn't grow, and if you exit, you're going to make a loss because you will have paid the fees for the agents that have traded for you. So it is important in the entire legal framework to provide an enforcement system. Enforcement is very key. Actually, part of the things that we established in Kenya was, as regulators, was for people to sit in front of a screen and observe how the market was moving. When the market became too hot, and too hot means a share is moving very quickly and it's skipping and it's going beyond the set parameters, they quickly alerted us, and one of my roles was to cool the market down by turning it off. So you turn it off, you wait, it cools down, and then you put it back on. And also, of course, technology is very key. One of the things that you need to legislate on and support with everything you got is the technology that you will be trading in. The opening and closing of the market should be synchronized, should be known by everyone, should be open, and it must be supported really by technology. And of course, disclosure standards will help a lot in the corporate governance of the capital markets. So very high level presentation. I'll be happy to take any of your questions during the plenary session. Thank you very much, Johannes.